Hello everybody. Another week has gone by and a lot happening in the markets and elsewhere too. We'll start by the unavoidable issue that's been overcasting things this week, and this is of course the yuan dropping below the psychological barrier of 7 yuans to $1 for the first time in ages. This happened on Monday. And it happened not because the Chinese authorities deliberately took steps to make it happen, rather the opposite. The Chinese authorities didn't do anything to stop it. It's an interesting dynamic, that of the Chinese currency. We must not forget that despite all of the outrage displayed by President Trump and by other people about what happened on Monday, in fact, the Chinese have been manipulating their currency for ages to the advantage of their clients, to the advantage, in this case, of the US and elsewhere. So what they've been doing is they've been artificially keeping the yuan at a higher value than what it's probably worth, what it would be worth if left to the markets alone to decide. And now they actually did what everybody else does, which is to just let the markets dictate. Of course, the impact was felt. Many people associated this change of tactics from the Chinese government with the opening of a new front in the trade conflict. The trade history has been, the trade story, sorry, has been the big underlying issue of our times. There's a dispute, as we all know, between the US and China. And this dispute is now threatening to derail the global economy and is threatening the future growth of the global economy. And the repercussions are being felt at all levels, everywhere, really. So this issue with the yuan was perhaps the opening of a new front in this conflict, where a currency is being weaponized, as a matter of speaking, by the Chinese in order to try to counterbalance the impact that the additional tariffs imposed by the US in the previous week have had over the cost of their products once bought by the consumers in the US. However, as I said, this is part of a wider story. The story is to do with the lingering conflict between the existing power and the emerging power, and is casting a shadow over the growth prospects of the global economy. And so the repercussions have been felt in the markets. The traditional refuge assets, the traditional safe havens like the Swiss franc and the yen, gained enormously at the beginning of the week against all other currencies. And this is because investors are sensing that you cannot escape the pool of what's unavoidable. And what is unavoidable in this case is that the tension will escalate. The tension will escalate, things will become tenser, and the growth will slow down. And many people out there are now predicting that within 3 quarters we will enter a global recession, meaning that growth will be negative at the global scale. This will, of course, have all sorts of repercussions, but in the markets it will lead to assets like gold gaining in value, and that is already happening. Gold is approaching $1,500 per troy ounce. Elsewhere we see that the stock markets, which have been doing incredibly well, and we're still in the longest running bull market in the US, are now slowing down. We've had several days of losses. That's now stopped, but the medium to long term trend points in that direction. And of course, currencies like the Swiss and the yen are also benefiting from this because they're seen as refuge assets. So this is all we have for this week, and I'll see you again soon.